The killer app for digital capital is these spot ETFs, and they got approved in January of this year, and there are hundreds of millions of dollars a day flowing into these things, and there's $1 billion a day of trades. This is the gold rush for Bitcoin because you've got the institutional endorsement, you've got the regulatory endorsement, you've got the banks clamoring to get in. Some are already getting in. The news this week was the largest bank in Brazil, in fact, the largest bank in South America is Bank Itaú, has announced that their customers can buy, sell, and custody Bitcoin with the bank. Imagine if JP Morgan said, hey, all of our customers can buy, sell, and custody Bitcoin with our bank. This is the decade of digital capital, and I use the word capital because money, sometimes people think, well, is that the currency or is that the store? Is it the medium of exchange or the store of value? I would say the real disruptive change right now is Bitcoin will emerge as the store of value, digital capital, and what's that worth? Hundreds of trillions of dollars is what it's worth. It's worth a lot, and that's a very hard driving trend. With regard to S-curves, normally the year before the S-curve kicks in, everybody thinks it's not possible, right? In 1903, before the Wright brothers flew, the New York Times had front page articles saying, experts show why flight is impossible, will never be achieved, right? So, with AI, people working on AI since I was at MIT, and Apple pointed out Siri is like more than 10 years old, and yet it's, the early versions of Siri and Alexa were used to pick your playlist, on your music streaming service, but not for a lot more than that.
In this interview, Michael Saylor speaks extensively with YouTuber Bitcoin News, elaborating on what's next for Bitcoin and its institutional adoption. He discusses how these developments will shape the market over the next decade. Since MicroStrategy adopted Bitcoin as a treasury asset, its stock has significantly outperformed the S&P 500. Other companies have followed suit. Canadian company DeFi Technologies purchased $67 million worth of Bitcoin. Japan's Metaplanet bought $10 million. And Similar Scientific acquired over $40 million worth of Bitcoin, while issuing stock to buy another $150 million. This trend supports Saylor's viewpoint that the Bitcoin gold rush has begun, especially with the approval of the spot ETF. Michael also sees AI as a disruptive technology poised to create exponential changes, enhancing organizational capabilities and boosting productivity. As more AI-driven services and automation are integrated into factories and companies, the impact on operational efficiency and capital growth will be profound. As we bring you more clips from the interview, please take a moment to like the video and subscribe to the channel to help us reach more viewers. Don't forget to turn on post notifications to stay updated with our latest content. Share your thoughts and observations in the comments section below. Thank you and enjoy the video.
And it was really just with ChatGPT-4 that you saw this first massive commercially viable thing. They went from 0 to 100 million users in a month. It's and everyone that was skeptical of AI, they use that, and they're not skeptical anymore. They're like, oh, I get it, that works, right? That works. And the killer app for digital capital is these spot ETFs, and they got approved in January of this year, and there are hundreds of millions of dollars a day flowing into these things, and there's $1 billion a day of trades. So imagine $350 billion a year of transactions on those ETF layers. So that's only going to accelerate, and I think that that with regard to the spot ETFs, they catalyzed corporate and institutional adoption of digital money, and you see examples like BlackRock has days when they buy hundreds of millions of dollars of Bitcoin. You see institutional hedge funds hold $1 billion or $2 billion worth of Bitcoin via these ETFs, and you see pension funds. The Wisconsin pension fund allocates $170 billion or something like that to buy Bitcoin. And then they go, oh yeah, that's 0.1%. We need it to be 1% to move the needle. So we dip our toe in the water, but you realize now institutions, corporations are moving in size that is order of magnitude and 2 orders of magnitude greater than was going on before. That's going to continue aggressively for the next decade. And that is the Bitcoin gold rush. I mean, the reason that's the gold rush is because by 2035, 99% of the Bitcoin will have been mined. So right now is the time when you've got natural sellers. You've got 450 Bitcoin available a day to buy from someone that might want to sell it to you, right? And when that supply gets cut off, the only way you're going to get Bitcoin is to take the price up and get it from an unwilling seller by bribing them with a high price increase. So this is the gold rush for Bitcoin because you've got the institutional endorsement, you've got the regulatory endorsement, you've got the banks clamoring to get in. Some are already getting in. The news this week was the largest bank in Brazil. In fact, the largest bank in South America is Bank Itaú, has announced that their customers can buy, sell, and custody Bitcoin with the bank. Imagine if JP Morgan said, hey, all of our customers can buy, sell, and custody Bitcoin with our bank. So you can see all these dominoes falling. Every quarter for the next 40 quarters, you're going to see more banks embrace Bitcoin. You're going to see more Wall Street firms. You're going to see more institutions step up. You're going to see more companies like Saylor Scientific. You're going to see, I mean, this week, MicroStrategy went out to raise a bond offering, and we started at 500 million, and then we just upped it to 700 million. So in one day, we increased our capital financing by $200 million in a day, right? And we're going to go raise $700 million and buy Bitcoin with it. And so these are major chunks of capital that are moving, and they're flowing from the analog to the digital, from the 20th century to the 21st century, from the traditional to the progressive capital market. If you look at that same trend in digital intelligence, it's pretty clear everybody's going to start using some AI tool. You know, Microsoft is going to bundle in some AI tool like Copilot, and pretty soon every white-collar worker with Microsoft Office is going to be using some kind of AI Copilot of some sort. It's going to spread like wildfire to 1 billion people, and then pretty much every white-collar worker will have to have it. And from there, it's, you know, the first step will be every white-collar worker uses it. The next step will be it gets embedded in every product. You know, like it's being embedded in Adobe, it's embedded in the graphic design tools and the writing tools and the math tools, etc. The next step will be your car will drive itself. It'll be embedded in a physical product. Then it will be embedded into robots. It'll be embedded into factories. It'll have a profound disruptive effect, and it's hard to calculate exactly how it changes the world, except with this one observation that I think you can make. And that observation is digital intelligence is going to do a lot of work. It's going to do a lot of work that humans used to have to do. So if you have an economy and you have 10,000 workers, and then you have capital equal to 10,000 workers, when I introduce a robot that does 10,000 person years of work for free, then the value of that labor is going to go down. The value of the capital is going to go up. And so my advice to anybody looking at AI is you better buy Bitcoin. Bitcoin is digital capital. And so once you understand capital, capital is a store of value, it's economic energy. If I can store capital in digital form and I can move it between any of billions of computers or any of millions of companies, if I can move it at any frequency, if I can program it using the most sophisticated servers, if AIs can trade Bitcoin with each other, when a billion AIs are trading with each other, they're not going to be trading buildings with each other. They're not going to be trading copper tokens or gold bars. They're not going to want to trade Apple or Amazon stock with each other. They're going to want to trade digital capital with each other. They're going to want to trade Bitcoin. And Bitcoin is, because it's digital, and because it's deflationary, it's got a half-life of forever, right? It's permanent, immortal capital. So when you think of it that way, you think, well, what do I want to own? Well, I want to own perfect capital, perfect money. And if you look at it statistically, right, Bitcoin has been, for the last 4 years, it's returning 4 to 5x as much as the S&P index. And it's been 4 to 5x as volatile. And the reason it's volatile is because it's a free capital market. It's a global capital market, and anybody can express any sentiment anywhere in the world, any second of the day, as frequently as they like. And the reason it's high performance is because of its technical characteristics. So what'll happen? Over the course of 20 or 30 years, Bitcoin will start to be just twice as good as everything else. Bitcoin's 5 times as good as the next best thing right now, but maybe one day in 20 years or 30 years when Bitcoin is the size of the S&P 500, maybe it'll only be twice as good. But it's always going to be better because it's pure digital. It doesn't have the physical liabilities of physical real estate or physical property. It doesn't have the cultural liabilities of art. It doesn't have the corporate liabilities of equity. And it doesn't have the political liabilities of currency. And it doesn't have the credit risk of debt.
There you have it. Michael describing the market's consistent growth in institutional adoptions as a domino effect, pointing to the $1 billion in daily transactions on the spot ETFs as evidence. He anticipates the transactions could exceed $350 billion in 2024, driving further adoption. As AI evolves, more people will turn to Bitcoin to address the gaps created by labor displacement, with companies increasingly using robots to perform tasks, thus reducing the need for human labor. According to Michael Saylor, this is the direction in which the market is heading, and people just need to be prepared. What are your thoughts on Michael Saylor's perspective on Bitcoin and AI? Please share your comments and observations in the comment section below. Subscribe to the channel and give this video a thumbs up. Thanks for watching.